Good afternoon, traders. This is Eli, Senior Market Strategist with RJOF Futures in Chicago. I'm giving you quick tips on candlestick chart basics. Futures and options and futures involve substantial risk, may not be suitable for all investors. A brief history of candlestick chart. I don't know if I say this right, but Monhesha Hanoma from 1724-1803, Japanese rice trader, is considered by many to be the godfather of technical analysis in candlestick charts. In his book, The Fountain of God, in 1755, he figured out that the price of rice has much to do with emotions and the psychology of traders. Candlestick is one of the most popular style of charting to describe price movement. They're alternative to line, bar, and point and figure. Although you can use candlesticks to forecast price continuation, it's mostly to predict a potential price reversal. There are many candlestick patterns available you can learn about and incorporate in your own trading plan. Today we're going to focus on a few candlestick patterns. Although you can use candlestick price patterns in smaller time frame, I'd recommend you use them in 4 hours, a bigger time frame, 4 hours daily, weekly, monthly, so that you could take advantage of bigger moves depending on your trading strategy, of course. So let's look at some patterns here. I'm going to look at some 1 bar, 2 bar, and 3 bar patterns. So I am randomly pulling up here NASDAQ. So right in front of us right now we have a 2 bar pattern. This is a bearish engulfing pattern. Bearish engulfing is the opposite of bullish engulfing. So bearish engulfing pattern, you like to see these patterns on the top rather than on the bottom. On the bottom you want to see bullish engulfing pattern. Also, it's recommended you use them in conjunction with other technical analysis, other studies, Western technical analysis studies, so you can get better confirmation. But I always recommend you don't use too many studies. You don't want to dilute anything, because what you really want to trade at the end of the day is the price. So today, right now, with just the price action today down 83 points, 83.5 points, you see that yesterday's price, the body, is completely covered by today. So if the market closes around here, this is a bearish engulfing pattern. This is signals some more weakness are likely. And this is a single candle formation as a hammer. This is an indication that this uptrend right here is coming to an end, and then followed by a doji. Those are also single pattern and spinning tops, and if you incorporate all of this, you could see that more weakness is likely, and you can use option strategies, or you could sell the futures with a stop with proper money management. And this is bullish engulfing pattern. Although this shows price continuation, you see price go higher. This is a 2 bar formation, but it would be nice to see this in the bottom. Okay, so this is a daily chart. I'm going to drop this to 4-hour chart, and as you can see a little bit closer here, and then that's a 2 bar formation, bearish engulfing pattern, and this is a 3 bar formation that is mentioned here. This is the evening doji stars. This is a doji right here. Evening star is a 3 bar formation. We have a strong bar going up, and then we have a little bit doji and indecision. You've got a next day, basically, some call this abandoned baby if this was a formation. But what's important is to see these type of formation or reversal patterns. That's really what you want to get in your head, is these type of formations, an indication, a strong day, a doji indecision, and a break of this line as an indication of reversal. And this is a hammer, and so this shows in the bottom of the charts, and so these an indication of a reversal. So what you want to do is this forming in the bottom, and that's kind of what you would like to see for this to continue higher. This is the bearish engulfing pattern, but as you can see, the price didn't continue to trade higher, although there's some support right here. So always use proper stop and proper money management. And let's randomly look at one more example, and let's look at the daily chart. and I'm gonna just say just pick up the euro. And so you can see here, market traded high yesterday, and the bearish engulfing pattern is weak. And there's another here structure on the left, and then you see bearish engulfing pattern. It's in a resistant line, and always incorporate other studies, and usually see that's a breakdown here. And one final thing I want to look at is, when you look at, in conclusion, when you look at these patterns, it's always encouraged that you use in conjunction with other studies so you get better confirmation. You can use a trend line, fib analysis, or whatever other analysis that you like to look at, so that you can see these and incorporate them in your trading. So good luck with your trading, and if you have any question, please contact your broker, and thank you. Have a great day.